All right, it looks like the dust is settling from what was one of the most brutal weeks in crypto. In fact, it wasn't even 1 week. It's been 7 down weeks in a row. It's the worst run that Bitcoin's had, I think, ever. I don't think we've ever had 7 down weeks in a row. And the big question is whether this week is going to be an up week. And for anyone who's ever done maths, you'll know that the probabilities of it being an up week are exactly the same as throwing dice. So we're going to look at what the traditional markets have on us and what the crypto markets have on us and decide whether this week could actually be a positive week or not. Also, if you are a Luna holder, if you were a Luna holder, if you ever held UST, if you're holding UST now, if you're a lunatic, you have to watch the show because we're going to talk about what the future is for Luna, the lunatics, and the Luna community. So instead of us starting our show the normal way, I thought that today, and really only today, we're going to have to start it with this because I think this is really all of us. So here goes.
I'm so tired of constantly losing money on risky altcoins. I want more safety in my life.
You mean you want to focus on Bitcoin or something?
Probably. It would be nice if there was an even safer option in crypto.
There is. Don't you know about stablecoins?
What? Stablecoins?
Yeah, stablecoins. These are cryptocurrencies which values are tied to another currency such as the US dollar. There is no volatility in these coins, so you don't have to stress about losing money.
But can I make money on stablecoins?
Not on all stablecoins, but I do know a very good one on which you can earn staking rewards. Terra Luna.
Terra Luna?
Yeah, Terra Luna is a stablecoin which gives you staking rewards. You can earn a passive income from it.
That sounds amazing. I'm gonna put my life savings in there since it's safe and based on the US dollar. Free passive income for me.
What the fuck?
Time to stop gambling crypto like a maniac and be a responsible investor. I may not make huge profits with this strategy, but at least my money is safe and I earn a nice passive income from staking. There you go. It feels good knowing that I can't lose money this time.
Bonjour.
Mr. Kwon.
로드 보그데노프. How can I help you?
Dump Terra Luna.
But Terra Luna is a stablecoin. My lot.
Excuse me?
Terra Luna is a stablecoin. It cannot be dumped.
Why not?
It will destroy the whole crypto market.
Switch is actually possible?
Well, technically it is possible, but
Then dump it right now. That's an order, Mr. Kwon.
it will be done, my lord. I would like to apologize for my behavior.
It feels so good to have my money invested into something that doesn't get shattered to the ground. For years I have been losing money, while all this time I could just put it into Terra Luna and get staking rewards. Terra Luna is my hero.
Holy shit.
I guess we have to laugh because we actually all are in this mess together. So I thought today we got to get have some fun after the week that was last week, and what a week it was. Wow. I'm just glad it's over. And now we can actually start counting the bodies. Now we can actually get the real body count and find out what the way forward is for Luna, because I think at one time, or maybe even still today, a lot of us are lunatics, or we were lunatics. So we've got to take a reality check and see where Luna is and what the road forward is for Luna. They have published their financials. We now know where we stand financially. And now we've got to, as a community, decide what the future of the Luna chain is. So it's going to be a huge show. What I need you guys to do is I need you guys to smash up that like, subscribe to the channel. Let's get people watching this, especially people who were holding Luna or are holding Luna. Let's get them to join and join the fight with us to try and maybe even recover the chain. That's what we're going to be talking about today. Before we do that, let's take a look at the markets. 7 weeks in a row. I guess you could now say that the market officially capitulated, or certainly the crypto market has capitulated. And we had a anomalous event, so to speak, because it was a real anomalous event. We've never had an event where you've got a seller of Bitcoin forcing $3 billion into the market, and you've got a protocol worth $60 billion completely collapsing into the market. So what can move this market now is two things. We've got to look at the contagion onto the crypto markets from last week, and we've got to look at the financial markets. When we take the two of those markets, then we can decide what the future is for crypto. Because right now we've got to deal with this, what happened with Luna, and we've got to deal with what's happening on the financial markets. Let's start off with the financial markets, because that's probably easier. And then we'll dig into Luna, and we'll dig into the after effect of Luna, and we'll start counting the bodies. We'll start doing a body count, and we'll start seeing where to go from that. If you look at the traditional markets, so this is where we are today. And I'm looking at the NASDAQ because the NASDAQ is very much the proxy for crypto, because, you know, we've been correlated with the NASDAQ. Very, very, very correlated. In fact, I'll show you something scary in a second. So we now have the NASDAQ 27% down from the all-time highs. And the Fed, remember the same Fed that promised us a soft landing, well, they're not stopping. They're not stopping. You got Fed, Williams came out and spoke now. He's saying, look, 50 basis points makes sense at upcoming meetings. He also said that we're going to be here for a while. We're going to be, this thing is going to be here for a while. The Fed is single-minded on managing inflation. They're going to do everything it takes to manage inflation. They're not looking at the markets right now because they know that the inflation is a much more costly thing than it is in the markets. And he's warning that we could be here for quite a while, that this managing of expectations will be here for quite a while. And the problem for crypto is that crypto is now showing the highest correlation that we've had to the NASDAQ. So we've got a 0.95 correlation. Remember that when the correlation is 1, it means that every time the NASDAQ goes up by 1%, then crypto goes up by 1%. And every time that the NASDAQ goes down by 1%, the NASDAQ goes down by 1%. Now the correlation is 0.95, which means that actually we're at the mercy of the traditional markets. And we're fully correlated with the traditional markets. And the problem is that the traditional markets, they have taken a huge hit. In fact, one of the biggest hits that they've ever taken. Certainly nothing to do with the soft landing that the Fed has promised us. As I said, NASDAQ down 26%, 27%. The Fed has been tightening their balance sheet. If you look at the value of the Fed's assets and liabilities, and you look at how much they've reduced them, they've reduced the assets and liabilities, 1 trillion reduction in over 5 months. Now that was, last time, that was reduced over the space of 5 years. So what they did over the space of 5 years in the previous cycle, they did in one month. In this cycle, and you can see the sell-offs. Look at the sell-offs. The sell-offs are they are compared to the 2000 dot-com bubble, the 2008 financial crisis, and you can see that we're pretty much where it is. We're pretty much following that same trajectory. The question is, how long is this going to last? Is this going to be a long landing or a short landing? And Mohamed Alarian, he says it quite rightly. He says, the Fed is confident about a soft landing, but remember, these were the same people that told you that inflation wouldn't go over 2% and that inflation was transitory. And now they're trying to manage inflation the same way, and they're not looking at markets. And the problem is that markets, traditional markets, haven't yet capitulated. So if you look at where we are with traditional markets haven't yet capitulated. So here's a signal here. So $11 trillion have exited equity market, which is makes this one of the worst losing streaks in dollar terms since the great financial crisis of 2008. But there could be much more to come because they're not showing real capitulation. And if you look at what real capitulation here says, let's look at the percentage of S&P companies that are making new 52-week lows. And he says, look, we're still not at the bottom for traditional markets. So right now, it feels like the traditional markets are going to continue to go down. The Fed's told us it's going to be quite a while. You've also looking at the price of gas, which is up 40 cents, which is in the month of May, and that'll show up in the May inflation data. Now, we could be in a position where the inflation data actually goes higher than 8.5%. I don't think so. I think it will be probably 8.2, 8.3 like last month. But again, we've got to watch out, because if the price of gasoline is going up because of the Russia-Ukraine war, then we've got ourselves then we've got ourselves into a situation. But there are some positive signs. I mean, there are some good positive signs. The first thing is that the ARKK ETF, which is the real proxy for growth stocks, the real proxy for growth stocks is the ARKK Innovation ETF. Remember, we spoke about this. I want to quickly show you this. Let me quickly just call it up. Give me a second. Let me show you the ARKK Innovation ETF. This for us is a proxy of growth stocks or of real growth stocks. And if you look at where it is, there it is. I want to just show you this chart over here. Okay, so it's had a little bit of a turnaround. In fact, let me take you guys a little bit further so you'll see how badly this ETF's been affected. So this ETF is probably right now as low as in the COVID dip. So like you look at where it is now compared to the peak of the COVID dip, and that's how low it is. Now we have on the positive side, we have had a slight turnaround. Let me go back to the daily so you can just see we've had a slight turnaround. Not only that, we have had more money flowing into this ARKK ETF in the last, let me find a few. Let's just have a look here. It's somewhere here. So we had the largest number of inflows into ARKK ETF last week. Now on the 5th straight week of inflows. And this is a proxy for how people are viewing growth stocks, and growth stocks are how people are comparing Bitcoin. So we've got ARKK ETF, which has been on a huge losing streak, now taking in more money than any other ETF, which is fantastic. We then also have manufacturing sector, which is showing signs of deteriorating or slowing down, which is great because that will come into the inflation data, and that will bring the inflation data down. So another good sign. Lynn Alden says that the US Treasury yield is now starting to turn, and when that starts to turn, that's usually a sign that the traditional markets, that the markets think that the Fed's job has been done. So I went and looked at this US 10-year Treasury yield. Remember we said last week that we're looking for it to start coming down. And Carl, I mean, if I look at this is printing this is just a higher low, right?
That thing's going to the moon.
It's going to the moon, eh? So it's not finished yet.
Neither is the Dixie.
So yeah, let's look at the Dixie because the dollar index, that looks like it looks like you might actually want to be buying it. It's printing like a nice cap and handle, and you can be
parabolic.
It's parabolic. I mean, the Dixie is going parabolic. So you know what? Let's just say this. I know you probably tuned in here because you want hopium, but right now it looks like traditional markets are going to get wrecked, and they're going to be here for a while. They haven't yet hit the bottom. I think the good news is that crypto has probably hit the bottom, and that's what I want to show you. Specifically, if you're a Luna holder, you want to see this. So let's look at where we're at with crypto, because we've now finally got a transparency report. Don't know if you want to call it that. When I saw this for me was the nail in the coffin. It was the nail in the fucking coffin. Okay, when I saw this, I wanted to cry. Because up until now, we didn't know where the Bitcoin were. We thought that they may have not used all the Bitcoin that they had to defend the peg. That's what we thought. We thought they were smart enough to not be dumb enough to be smart enough to defend the peg and to stop defending the peg when they realized they were losing the fight, so that they could keep the reserves to fight another day and let the market get back to where the market was going to get to. They weren't smart enough. They were dumb. I mean, pretty inexperienced. I mean, if I were to bring this down, I'd say that they lacked crisis management skills. They were super inexperienced, because everybody knows that if you're fighting a losing battle, you don't use all your ammunition. And what they did was they just kept using more and more of their reserve money. And effectively what they did was they destroyed so much money. I mean, let's look at this. As of Saturday, 7th of May, they had 80,000 Bitcoin, which is like $3 billion, call it. That's 39,914 BNB. They had USDT 26 million. They had USDC 23 million. They had $200 million worth of Avalanche or whatever it was. They had UST, and they had 1.691 million worth of Luna. That is as at Saturday, 7th of May. Okay, fast forward. They send this to the market makers. And today we get this. What's left? 313 Bitcoin. 39,914 BNB. 1.9 million Avalanche. The reason why they didn't spend the Avalanche is because the Avalanche are vesting. They're vesting. They've got $1.8 billion worth of UST shitcoin, and they got $222 million of Luna. My 6-year-old son could have traded better than this. My 6-year-old son could have done better market making skills than to fight a falling knife and to fucking destroy the whole thing. Never seen anything like this. I don't think ever in the history of crypto have we seen such negligent trading, blindly defending the peg with no crisis management skills and no plan. Taking 80,000 Bitcoin and reducing it to 313 Bitcoin. Why did they keep the 313 Bitcoin? I mean, they may as well just throw it into the market, just give it away. So, long story short, we are where we are. We've got to deal with the consequences now, because this was the final nail in the coffin. This was the nail in the coffin. Because there was some hope that maybe they didn't spend the Bitcoin and they had $1 billion or $2 billion. And when you have $1 billion or $2 billion, you can restart the chain. You can rebuild. Now we got this. Let's quickly look at what this adds up to. Okay. So if you take the numbers, they had $3 billion, $3.12 billion. They got $244 million left. No, they don't. Because if you remove UST, because they've got UST here, so remove that, because you can't sell $1.8 billion worth of UST now. Even though it says the price is 8 cents. Remove Luna, because, okay, their Luna's worth $47,000. It was worth $115 million. It is now worth $47,000. So remove that, remove the UST, because the UST are worth like bullshit, dead, finished, kaput. Okay, so you've got 65 plus 11 plus 12 is 82, 72, 76. I've lost mathematical skills here. $85 million. Nutshell, you got $85 million. What do you do with $85 million? My feeling, and I've said this publicly, I think take the smallest holders of UST. The smallest holders, hope that these are the people that were affected the most relative to their wealth. Make them whole, and let's move on. That's pretty much what happened. That's pretty much what's left. And I think that Vitalik said it, and I think that Max Maher said it as well. Let's have a look. I think I kept this somewhere here. Yeah, I think Vitalik said it. He said, support the strongly coordinated sympathy relief for the UST smallholders. And he's right, because we could have made the poorest 99.6% of the wallets whole. And then the 0.4%, which are whales, they would have suffered. I must be honest, my wallet would have probably gone into the whale wallets. We would have suffered. But at least we can make the small fish whole, because the small fish is probably the one that relatively lost most of their wealth. Truth is, no matter what these proposals are, there's $80 million left. So even if they, do send it across, you may get $40, you may get $50, but there's nothing to talk about anymore. And so as a Luna holder, we've got to be realistic now. You're not going to get, there's no more money here to make you whole. So that's the first thing that you've got to come to terms with. The second thing that you've got to come to terms with is here. Let's have a look at it. They're talking about here, let me look for it here. Oh man, where is it? Here we go. So Do Kwon on Saturday night, I think it was Saturday night, came out and said, I spent a few days talking on the phone to Terra community members. I'm heartbroken about the pain my invention has brought on all of you. And he talks about how he believes in decentralized economies that they deserve decentralized money, but UST in its current form will not be their money. Neither I nor any institutions affiliated profited in any way. We are currently working on documenting the use of LFG BTC. That's done. Nothing left there, gone. And now there's proposals to look after the builder community, to restart the chain, to keep the chain going. And to this end, I want to maybe give a reality check here. I'm probably the biggest lunatic there ever. I supported, say again?
You froze a bit.
I love Luna. Luna was my biggest bag. You all know Luna was my biggest bag. I supported all the builders community because I think that the building community behind Luna were amongst the smartest people that I've ever worked with in my life, whether it was Delphi, Kujira, all the projects that were out there, Terra Swap, not Terra Swap, all the other dexes. And the reality is that the whole premise of the Luna blockchain, was a blockchain that was based around a algorithmic form of stable money. Am I frozen?
No, you're fine.
I'm not frozen. If I'm frozen, tell me in the comments. Okay. So, problem is that right now, the concept of an algorithmic-based stablecoin probably isn't going to work the way it was intended to work. We'll never know that. We'll never know. And I'll tell you why we'll never know. Because I think Luna made a fundamental mistake. Luna went out to try and prove that an algorithmic stablecoin can work. Then they got into an identity crisis and they said, hold on a second, an algorithmic stablecoin can have this thing called a death spiral, which is exactly what happened. So instead of just admitting, or instead of continuing as an algorithmic stablecoin, what they then did was, what in my mind was the fatal mistake. The mistake for Luna, and the reason why they collapsed when they did collapse, is when they started to semi-collateralize their loans. Now, I'll tell you what I mean. If there was $10 billion or $15 billion of UST outstanding, and there was no collateral, there was zero collateral behind it, then it's an algorithmic stablecoin. It relies on arbitrage and it relies on momentum of the market. The minute that Do Kwon went out there and he said, hey, there's $3 billion collateralizing the stablecoin, what he basically said is, he said, hold on a second, there's 10 billion people that need to eat, and there's 3 billion meals outside. Who wants them? The minute that they went and semi-collateralized a stablecoin, and they got into an algorithmic stablecoin, and they got into an identity crisis, and they were no longer a stablecoin, a algorithmic-based stablecoin, they made a fundamental mistake. And you want to understand how the fundamental mistake worked? Try and think about it like this. Imagine you're inside a nightclub or a concert, okay? And imagine you haven't eaten for days. And inside there's 10 billion of you, okay? And then we go outside and we say, there's 3 billion meals outside the door. But there are only 3 billion meals, and we're going to give those to the hungriest people. What happens? You get a bank run. You get everyone trying to go through the doors to go and get the meals. Everyone's trying to get the meal because they know their meals. When there were no meals, when there was no food outside, then we were all in the concert room together, and we were all hungry, and that's just how the system worked. The minute that you said, hold on, we're semi-collateralized. Whoa, hold on. Semi-collateralized means there's only 3 billion meals for 10 billion people, 20 billion, because that's how many UST was actually out there. I'm out. And that's when the bank run happened. And so we'll never know whether the algorithmic-based stablecoin would work. Obviously, now in hindsight, we know that, okay, there's the death spiral and algorithmic stablecoins won't work. But Luna, when it died, wasn't an algorithmic-based stablecoin. It was a semi-collateralized stablecoin. And when a stablecoin is semi-collateralized, actually the stablecoin is under-collateralized. So when you say semi-collateralized, what you mean is everybody can have a little bit. It's an unstable coin, like some of your ex-girlfriends. That's what it is. It's more unstable than Amber Heard. That's what it is. Okay. So that is where we're at. So let's think about what happens going forward. You've got this amazing builder community, and you've got this chain, but this chain revolves around a stablecoin, an algorithmically backed stablecoin. So in my opinion, truth is, and you know I'm the biggest lunatic in the world, but guys, I think it's time to move on. I think that we can sit here and we can hope and we can hope that something happens and they can take a snapshot and maybe they can follow this plan that Do Kwon spoke about. Here we go. Do Kwon spoke about this amazing plan. The plan is to give 20% of developers to issue $1 billion, to take a snapshot. They want to take a snapshot of the chain, to give 40% to Luna holders at the time of depegging, 10% to Luna holders at the end of the operating time, 30% to rescue financiers and angel investors. There's many of these proposals. The question I have is, will these proposals actually work? What are we reviving here? What are we reviving here? We're reviving a chain that has incredible builders, but the whole chain was based around an algorithmic stablecoin. That's what it was. Now the algorithmic stablecoin doesn't work. What are we reviving? What, are we going to run another chain like Solana? Run another chain run another Solana, another Avalanche? That's not what the Luna Terra blockchain was built for. It's not what it's optimized for. It's not optimized for smart contracts and for speed. It's optimized for DeFi, and it's optimized for DeFi around a stablecoin. So my feeling is, even if I take these snapshots, I don't see this ever becoming a real protocol. I think that the market's never going to trust it again. I think that the market's never going to trust it again. I think that there are better chains out there, and I think that the market's now gone into capital protection mode. And for as long as the market is in capital protection mode, they're not going to take a chance and invest in a chain that was once dead. If you are invested in some of the projects that were built on Luna, things like Astroport, things like, I don't know, whoever you were invested in, Lunaverse and whatever else, there may be some hope for those projects. And I'll tell you why. Some of those projects were all around maintaining the peg. So things like Kujira, things like, I don't know, a whole lot of Orca and everything else. Those were all projects that were around maintaining the peg and around keeping the peg of a UST-based stablecoin. Those projects, very smart people, they'll probably reallocate whatever funds they have. Maybe they'll repurpose their tech, and they'll go and operate somewhere on some of the Cosmos blockchains, or the ones that are interoperable with the Cosmos blockchains. That could happen to Astroport as well. They may take the DEX and say, you know what, this works. We can migrate it to Secret Protocol, because Secret Protocol, for example, it works on the same, on Cosmos Tendermint, on that technology. So remember, because Luna and Terra were written on the Cosmos Tendermint technology stack, a lot of the projects will be able to migrate to other platforms. Some projects will die because their whole premise was around maintaining the peg, but other projects may be able to migrate. So maybe not all is lost for the projects. So if you're holding some of the projects, evaluate them one by one, maybe call the founders. We're certainly calling the founders, and maybe we'll even give you guys some kind of feedback. And we'll tell you which ones we think may survive and which ones we think will eventually die. But if you ask me, if you were a lunatic, I think we've got to move on. And I know it's hard to move on. I'll tell you why it's so hard to move on. It's something that I tackled on the Invest Answers show. I wasn't going to talk about this today, but hell, we're here and we're having a heart-to-heart. So I'm going to tell you why I think it's going to be very hard for a lot of people to move on, and why you should ignore the sentiment on Twitter. So it's quite complex, and I'll tell you why it's complex. Because what we're experiencing is we're actually experiencing a hormonal, it's in depth, it's inside of us. It's a hormonal connection to Luna. We have this hormonal connection to Luna. And I'll tell you more or less how it works. We can go into it in detail probably one other day when we have some more time. But essentially, when you buy a token, in fact, let's go one step back. The human body has a whole lot of hormones. Your hormones inside you basically drive your behavior. But they drive it at a very deep level, a very, very, very deep level. That's why when people are, for example, depressed, usually you realize that they're depressed because of their hormones. And there's not much that you can do or say that will change a person's hormones. Very, very, very different. Now, specifically when we're dealing with crypto, there's 3 hormones that come into play. And this is why crypto is such an amazing ride. The first hormone that comes into play is serotonin. Serotonin is the happiness hormone. If you have a lot of serotonin, you're usually quite happy. So serotonin makes us all happy. Remember we spoke about serotonin. So serotonin is the happy hormone. Most people have the happy hormone called serotonin. Some people don't. those that have serotonin deficiency usually have some kind of depression or anxiety or aren't as positive as other people. It's important that we understand where serotonin comes into all of this. Second hormone is a hormone called dopamine. Dopamine is the fun, the adrenaline rush hormone, the one that makes us feel alive. That's the one that, as crypto people, we're dopamine addicts. So we love the fact that the numbers go up and down, they give us this rush. That's dopamine. The third one is the most important hormone here. And this is the one that's tricking us. This is the one that's destroying us. That hormone is called oxytocin. So oxytocin is a hormone which makes us feel connected to people, to things. Oxytocin, for example, a mother gets an oxytocin release when a child is being born. As a child goes through the birth canal, the mother gets an oxytocin release. And that is what makes her feel connected to her baby for the first time. When a mother breastfeeds, she gets an oxytocin release. When brands play emotional ads and songs and stuff that makes you feel warm and fuzzy inside, what they're trying to do is they're playing on your oxytocin to try and make you connected to their brands, right? One of the biggest tricks that advertisers do is when a mom is giving birth to her baby, they give her a little goodie bag with diapers and wipes and stuff like that. And the reason why they do that is because at that point in her life, her oxytocin levels are so high because she's just had a baby that she becomes connected to the brands that are in the bag. Okay, you got that? So let me tell you what happens with Luna, for example. And it generally only happens with tokens that you buy on the way up. When you buy a token and the token goes up, your brain releases dopamine. At the same time, your brain also releases oxytocin. And that makes you feel connected because you got this dopamine rush because you bought Luna, Luna goes up, your brain releases dopamine, wow, I'm a genius. And your brain also releases serotonin. And that serotonin makes you feel connected to Luna. Go back in history. Tell me how many tokens are you connected to that went down on the first day that you bought them or the first week that you bought them? The answer is probably none. And if not none, a whole lot less than those that went up. Now go back to the ones that went up on the first day that you bought them. So you bought a token, went up on the first day, your body released dopamine and oxytocin at the same time, right? And now you feel connected to the token. We all feel connected to Luna. Right, now let's bring back the serotonin. Serotonin is the happy hormone, the one that makes you feel happiness. Happiness makes you feel positive and optimistic about the future. So when you combine a sense of attachment, which is from oxytocin and dopamine, with the sense of optimism for the future, you think naturally that that you become attached to a token, and you naturally think that the price is going to continue to go up because you're happy and you're an optimist. Those are the chemicals that come into your brain when you buy a token like Luna. And a lot of us today are feeling a sense of attachment and actually a sense of loss for this thing that became connected to. That's basically what it is. We feel a connection to this thing that we felt connected to. Now you ask yourself one last question. One last question before I bring in Birb and we can talk about whether there's hope on the charts. Why did we defend Luna so hard when the critics came and told us that this thing may come down? Why did we defend it so hard? Because when you feel connected to something hormonally, when oxytocin takes over and you feel connected to something hormonally, when someone attacks it, it's like when someone attacks your child. What do? You defend it. You defend it blindly. That's what happened. That's why we all felt so connected. And now we're dealing with the aftermath. What is the aftermath? Huge. Massive. Well, other protocols got hit. Suffering. Stablecoin protocols. I mean, I read this thread by DeFi Made here. And he talks about, so you had an ST ETH and an ETH DPEG, which is huge. It means that staked ETH is now acting differently from the underlying ETH that's staked. You had a Tomb, which is another algorithmic stablecoin, completely depegged, and there is speculation that it probably won't repeg. I'm not going to comment on that today. We'll get Harry to talk about that. You've got every other fixed forex stablecoins depegging. Venus Protocol suffered a $30.5 million loss because Chainlink Oracle stopped liquidating the price of Luna after 0.01, and bang, I think I don't know if they can ever recover from that. You've got Blizzard Finance on Avalanche. Same thing happened. You've got Grok protocol. You've got, I'm not going to go through all these protocols, but you can see that there have been Cover Platform hard-coded UST as $1. It was a mistake. They hard-coded it. They said UST can never go under $1. And users were able to mint USDX. And so what they did was, because it was hard, because it was hard-coded to $1, when it earned under $1, people started to mint their own US dollars, which is USDX, and sold it on CarverSwap. And so the protocol suffered a loss. It's going to take a long time to recover from all of this. But we are where we are. And it does give us buying opportunities that we've never seen before. Because never before have we been in a position where you've had an $80 billion protocol collapse, and you've had all the ecosystem around it collapse, and the protocol was also a forced seller of $3 billion worth of Bitcoin. And that's why I think we may be near the bottom of the crypto correction. I'm not sure we're going to go much lower in the crypto correction, because I think we had an anomalous event. $3 billion plus an $80 billion capitulation. I think that was an anomaly. But let's see what the charts are telling us. My brother, I haven't seen you and I haven't heard from you for so long. How are you?
I'm good. Thank you so much. Well, it is good.
Good, brother. Okay, so talk to me. Tell me that there's some hopium in the charts, bro.
There actually is, right?
Let's have a look.
Sure thing. I'm not always like the fullest of hopium. I try to be realistic as possible, as long as the charts tell the story, and they always tell incomplete story, right? So whenever we kind of like encounter and approach the analysis for cryptocurrencies, I always usually try to encourage having a look into the more correlated, into a very strongly correlated markets, right? So here, of course, we're talking about a very strong correlation between equities, stocks, and Bitcoin. And, seeing so much of a tumble, basically on the equity side, as in the composite index recently, or on the S&P 500 for the large caps, the market's breaking down and visiting long unseen, regions, targets. Well, this all sets the backstage kind of like environment with a lot of, gray dark clouds. Of course, we're looking at once in generation kind of like situations overall in the planet, not only including the war that is happening, that was unseen at this scale, basically publicly ever since the World War II. Of course, some other wars going on anywhere else in the world probably too, but we're talking about the market-wide situation where the 42-year downwards trends on 10-year Treasury yields are basically breaking upwards. 42-year downwards trend, right? This is like lots of fundamental, I should say, changes going on. And of course, galloping inflation, which is double digit in many countries, including my own. We're talking about rate hiking cycle. We're talking about midterm seasonal kind of like, overall midterm seasonality that tends to return flat or negative performance on average for, since many years. We are talking about the worst 4-month opening into any year in S&P 500 history, right? We're talking about the 4th month sequence that is the worst in ever recorded S&P 500 history. This is striking, very, very strongly, if you ask me. And then, like I said, we bring it back to the very strong correlation. And the bottom indicator on the bottom of the chart is the correlation coefficient for Bitcoin against S&P 500, and it oscillates from -1 on the negative side, and the perfectly negative correlation, as in the market tend to opposite tend to continue and follow opposite directions, against each other, versus +1 positive correlation, the perfect correlation. Bringing to the same directions, right? And Bitcoin is right now on the 7-week basis. Now on the 0.91 rate, 0.91, 0.93, this has been the rate for the past couple of days, weeks. And this is as highly correlated as it can get historically, right? We're really into this very historical high areas when the markets are the most correlated. And typically when the crash happens, this tends to correlate markets temporarily at least, right? So whenever there's a crash, the markets tend to crash together. Have a look at March 2020 COVID crash. It was not only stocks and Bitcoin crashing, but also it was commodities and gold crashing, which was supposed to be basically a safe haven, right? So everything, when one thing crashes, it tends more often than not that many more markets crash altogether. So strong correlation is not necessarily the most promising or the best situation Bitcoin could ever be found with, but there is some hope, right? Of course, slowdown of an upsloping trend tendency has been very apparent for the past couple of months ever since 2022 started. This is a 50-month average here, the black curve. When we are kind of like momentarily breaking downwards throughout the past week on the Terra Luna crash, which you brought and explained very well, and we kind of like visited the areas below like 28,000s, but we did manage to close above it, right? And what does that tell me? Well, this tells me that we're looking at a potential reversal setup, because more often than not,
Wow.
of course, it's not always confirmed, or the past performance is never a guarantee of future performance. But while we are looking at the failed breakouts, right? We had a $65,000 high, which was this, right? We had the failed breakout on top, of course, which led to massive 60% retracement. And more often than not, it happens that when you kind of like are looking at the downward setup for the breakdown, and it actually doesn't close off below the broken support, but it brings it back. Typically, it confirms another failed breakout or a swing failure, regardless how we call that. And this is a failed pattern, right? And a failed pattern, failed swing, those tend to perform better in the opposite directions than anticipated based on the pattern itself. So more often than not, if you say head and shoulders pattern, right? Imagine this is head and shoulders, and then it breaks out. But eventually, when there is some failure, some fundamental change, and it breaks down below its neckline, then it tends to perform better to the downside than it would to the upside, basically. And same thing is going on here, right? So you saw, that upwards failed breakout. And right now we're looking at the actual pin bar or a candlestick pattern, which is called basically bullish hammer, where the body, the candle body to the total candle range ratio is basically 1 to 3, 1/3. So we're looking at lots of congruent, confluent potential reversal indications in my eyes, right?
What about people that are calling for $20,000 bottom, and that's last time's all-time high becomes this season's all-time low? What do you think of that?
Well, there is always probability for that, right? Whenever there's there are things going on on the NATO side, on the exogenous side, as in not technical analysis related. We're talking about war, Russia, Ukraine. We're talking about NATO strengthening, how Finland and Sweden applying potentially some voices going on there. So lots of fundamental instability, and if those things kind of like congregate all together, I would argue this may see some downward implications to the markets overall. But unless something like that happens, unless some fundamental changes occur, I would argue that we are looking at a potential reversal setup also on the sentiment side, because basically the way I see it in the charts, not only the price action but also the sentiment side. Last week we were looking at the capitulation, at the selling climax, the overall unseen pessimism on the speculator side. Seen only 2 times in history ever since this bull market started, right?
They've been whacked.
Yeah.
Yeah.
So overall, the crowds tend to get it wrong more often than not, especially the more extreme they take it, right? Mainly because of saliency, because of perception biases that we tend to believe. It's called the saliency or perception bias, recency bias, that we tend to value more what's happened recently and projected into the future, right? So just because the market has been going down, people projected into the future that it's going to continue going down forever. And same way it goes for the opposite side, right? Whenever market keeps pumping. So all things concerned, the markets usually, the speculators, tend to get it wrong at the extreme, and the more extreme they take it for their like certainty, be it upwards or downwards oriented, I would argue it also translates to getting it wrong in terms of selling the bottom or buying the top, right? The fear and greed is exactly what drives the biggest reversals, the blow off tops and the capitulations. And no question to me about that this has been the biggest capitulation we've seen since this bull market. Perhaps even bigger to an extent for Bitcoin than we saw in the COVID crash. At least some market ratings would tell you that.
100%. All right, Birb, listen, I know we kept you waiting, so I know you got an agenda. Much love, brother.
That's fair.
Thank you.
Much
Thank
love.
you.
Stay safe.
So Birb is seeing some hope. Birb is seeing some hope. That's the bottom line. So you were in Luna. I think we've just said, I think it's time to let it go. Let it go. If I can let it go, you can let it go. And I promise you that as much money as you lost on Luna, I lost more. I promise you that whatever proportion of your portfolio you lost, my proportion was bigger. Mine's bigger than yours. Remember that. Just remember that. Carl, why are you laughing, bro? Is it the first time you heard that?
Yeah, I've never heard that.
You never heard that.
Good one. Good one.
The other thing is you got to remember that everybody lost. Very smart people lost. So Binance invested in Terraform Labs. They got 15 million Luna. That was worth $1.6 billion. Gone. Worth nothing. Worth nothing. We all got staking rewards. They got 12 million UST from staking. Gone. You got the smartest people. You're in with the smartest people in crypto. You got Jump. There are rumors that they lost $8 billion. I don't think they lost $8 billion. I know for sure they lost $1 billion and even more. So they lost $1 billion at least. So I mean, everybody lost. Now the question is, what are you going to do? So you have a couple of options. Option one is you can crawl up in a circle and you can crawl up in a corner and die. Just lie there, I don't know, wait. Or you can get up, dust yourself off, finish the pity party, and then fight back. Now, I know it feels very hard to fight back. It feels really, really, really hard to fight back because you don't have a stash left. So, and I'm in the same boat. My stables were sitting in UST because I was an asshole. I said it to you last week. I had my money in Luna and I had my stablecoin sitting in earning 20% because I was that video in the beginning. So now you got a choice. You can tap out, you can leave crypto, or you can fight back. You got to make the choice now. If you want to tap out, well, we can't help you. That's, you're going to tap out. If you believe in crypto, then we're going to help you rebuild. We're going to build it back slower, more conservatively, because that's the market that we're in now. The market that we're in now is a scared market. You can see that Bitcoin dominance is now 44. You see the Bitcoin dominance is spiked. See, it's telling you the market's scared. You got the market at extreme fear. You've got money flowing into ETH. So all the DeFi protocols, the money's flowing into ETH. So you can see the ETH dominance was 55.64 before all of this. And now it's 64. So more money is flowing into ETH, which means that what people are doing now is they are building back better. Build back better, but not the way Joe Biden does, just different. So it's like build back better, but not the way Joe Biden does it, okay? So it's a different build back better. Mine's definitely bigger than Joe Biden's. That's for sure.
That's for sure about that one.
Definitely bigger than Joe Biden.
When did you see his one?
I saw his build back better. It was rubbish. I'm saying our build back better is better. If you want to build back better and you want to build back strong, we're going to do it together, and we're going to do it in a structured, systematic approach. The first thing is we've got to realize we've got to let go of the Luna dream. That's gone. We've got to be big people. We knew the risks when we got in. We knew it was all based on a decentralized stablecoins. For various reasons, we all got in, and we got in. I got in certainly too much. You guys know that. And we didn't get out in time. We've learned the most valuable lesson of our lives. We learned the most valuable lesson of our lives together. Now we build back together. And if you're going to build back together with us, there are a couple of things that you need to look at. I saw this from 6529, Punk 6529. It says there's only one rule now, and that is to survive. You have to survive. It means that you don't take stupid risks now to try and make your money back, because that's dumbass, because you'll lose your money, because this is not that type of market. Now you get into blue chips. Now you get into tokens that are going to survive a bear market, because you don't know how long this bear market's going to go. Now you dollar cost average. Because let me tell you something, every single time that I've thought that this is the end, and every time that I've questioned my conviction for Bitcoin, and I found myself questioning my conviction for Bitcoin over the past week or so because I was so battered by Luna, every single time that's happened, Bitcoin has done a 10x afterwards. At the end of COVID, Bitcoin did a 10x. It was $3,000. It did a 10x. It's still trading at about 10x where it was at the bottom of COVID. Now is the time to be DCAing in. Okay, maybe it's not the bottom. Maybe it is. Who knows? We do know that we are in extreme fear. We do know that we've had a $3 billion seller in the market. We do know that we've had, for the first time in history, a protocol collapse. now is not the time to lose interest. I know you're wiped. We're also wiped. But we'll build it back together. And how we do it is we're going to dollar cost average into blue chips only. That's the first part of it. The second part of it is we're not going to walk away from don't walk away from the crypto industry. So Bobby says, the crypto Bobby, Rob Poen says it. He says, my best advice in the bear market is whatever you do, don't walk away. This is exactly what happened to me. You could be sitting 100% in cash, but you should always be paying attention. The best opportunities are going to come to the people who keep their eye on the ball. I remember this. And I'll tell you how I remember this. Happened in 2014-15 bear market. People who stayed, they found ETH early. To me, I found ETH early, but what I also found was later, the last bear market, I just kept my eye on the market, and then DeFi came out and yield farming came out, and that's what got me back into the market, and that's where I started making a whole lot of money. It means we have to adopt a more responsible approach. We can't be degenning now. Now is not the time to be degenning. Now is the time to maintain your stash, to survive, and to dollar cost average into strength, and to make sure that your portfolio is super, super, super solid, to dust off the oxytocin and not feel connected to garbage tokens. And if you are connected to them, sell them and get into tokens that are going to do well in a bear market, that are going to survive a bear market and do well in a bull market. That's what we're going to be focusing on. We start today. In fact, tomorrow is our first lesson. Sheldon's coming back. Sheldon's coming back tomorrow doing a show, and he's going to show you how to trade your way out of this. Because remember that he traded his way out of bankruptcy, pretty much bankruptcy. We're gonna build your portfolio together. We're going to build your portfolio stronger, and we'll tell you when we think it's time to start degening again. And then one last thing. I know that a lot of people, in fact, let's look at it. I saw it here on a thread from the DeFi age, and it made me think with all the saltiness on Twitter at the moment, because everybody wants to blame someone for their losses. People are blaming Do Kwon. So as I said to you before, I don't agree with people blaming Do Kwon. The guy had the best intentions to make money and to change the way that money is, not backed by anything, but backed by an algorithm. He did it in probably the best way that he knew how. And yes, he did become arrogant towards the end. But ultimately, all he wanted was for everyone to share the amazing invention that he had. And it collapsed. And today on Twitter, I see the same thing. I see salty people, even accusing us, saying, don't you feel bad that you put a whole lot of your community members into Luna? Listen, I was in Luna too. I just tell you what I'm doing. If you want to follow what I'm doing, that's great. But ultimately, you should always be doing your own research. And you should always be exercising risk management. And you should always be sticking to the 50% in the HODL portfolio, 35% in the 10x gems, and 15% in the speculative gems. That's what you should be doing. And I wish that the community didn't get as wrecked, but I also wish Luna didn't drop. What we wanted to do was take you on the journey with us. And at the time when it was flying, remember, we found Luna at 35 cents. And at the time when it was flying, we were all flying. And unfortunately, this is one of those things that crashed. That's why it's called risk reward, because you take a lot of risk and you get a lot of reward. It's not called reward. Because if it was called reward, you would just get the reward and you wouldn't take risks. And unfortunately, this risk was realized. It doesn't mean that the next one's going to be realized. It means we've got to keep playing the game. We've got to keep playing the game together. So from today, for the rest of the week, we're going to rebuild. That's what it's about. We're going to rebuild. We're going to rebuild together. And we're going to look back at this in a year and we're going to say to ourselves, we've got more money now than we had when Luna was at its peak. And listen, if I can say that, you can say that. So we'll see you guys again tomorrow for lesson 1. Right? Right? See you guys again tomorrow. Until then, don't trade at all, my friends. Stop trading Luna. Stop.